Well, it may be stating the obvious, but the fact of the matter is, if we look at just about every rise or fall of the markets, there are a certain number of people in the population that will continue to believe that the same trend will continue. It's a bizarre fact, but many people trade on it. And people make money all the way up by selling just before the taxi driver or people who are relatively inexperienced investors start piling into the market, and they make money selling all the way down at a profit to people who go on selling and selling and selling, and then they buy back again. It's a fact of life, and we're seeing some of this kind of cyclical arguments right now. There have been people who talk the market all the way up to absurd heights and fail to recognize the current crisis. These are the same people that are predicting that the current crisis will continue, it seems, forever. Of course, both of these things are absurd nonsenses. There have been cycles since time began, and they will continue. The big question is, how long will this particular cycle continue? Well, one thing we can be sure about is that there's never in human history been so much money poured into the global economy and international economies to try and prevent a massive catastrophe, as governments see it, in terms of deflation. And this pathological fear, this allergic reaction to deflation, is what is driving the fact that we're likely to see an overshoot on the other side. I say likely, we really don't know, but there are all kinds of deflating things could only happen once. Oil could only fall from around $145 a barrel to around $35 to $38 a barrel once. It can't go on falling from $35 a barrel to minus $100 a barrel. You've done it. Once that cost has come out of the equation, then the deflationary effect of oil prices is gone. If oil prices continue for another 12 months at $35 a barrel without changing at all, you then have zero inflation or deflation from oil prices. It's more or less as simple as that. I know there are delayed factors, but that's more or less the situation. And of course, you get an overshoot. So the oil prices predictably went down too low, and they're now creeping up again. And at the time of which this video is made, which is early May 2009, we've already seen, as I predicted, oil prices tip up at around $60 a barrel. How far could it go higher? Well, yes, it could, a lot higher, especially if the real demand actually does start picking up. When the economy crashed in the autumn, people in the UK were driving around 14% less miles than they were 3 or 4 weeks previously, some of them. So, of course, demand fell, and people were stockpiling petrol and other petroleum-related products, and that means prices fall. But you've only got to have the economy tick up a little bit, and then you find that there are other factors ticking away. The demographic time bomb in the Far East, for instance, with 1 billion children alive today, all of whom will soon be adults, within the next 15 years anyway. All of them want, ideally, to own their own cars, to have a consumer lifestyle that you and I take for granted. And it's that kind of demographic pressure, plus the fact that you have some tens of millions of middle-class people entering middle-class lifestyles in India for the very first time every 12 months, and a similar number in China. And again, lifestyle issues, demand, and so on. And so we're seeing a complex picture of underlying demographic pressures and aspirational pressures at the same time as temporary short-term glitch due to, of course, the catastrophic shortage of capital and the impossibility of getting credit. Now that will pass, and when it does, we will find all kinds of stimuli which have been put into the economy, trillions of dollars worth, maybe 3 trillion, 4 trillion, who knows, maybe more, and will be very hard to pull out of the economies of the world just as things start to tick up. So watch this space. I'm expecting to see inflation, and when we see it come, we'll see it higher than in the past, I suspect, for a season. And will the governments be that worried? I suspect not, because it's the oldest trick in the book to erode government debt. If inflation ticks along at 5 or 6%, then government debt will fall by sheer mathematics once every 15 years. Maybe that's not very fast, but it means a significant element of that debt disappears. If inflation in a country is running at 10%, then government debt will be wiped out in 7 years by half of it. Half of it will disappear every 7.5 years. So that's a lot of debt to disappear in a short space of time. So inflation can be a government's friend when it comes to eroding their own debt problems. Watch this space. We live in a complicated world.